Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today I would like to talk to you about 3 different companies, Twitter, Amazon, and Neo, all of which have their earnings on April the 29th, on Thursday after the market close. So I want to keep my eyes open, keep them on those. I expect good things for them coming up. Amazon's huge. Amazon's had a lot of momentum recently, and they haven't even hit the average or the high price targets that we're looking forward for the next 12 months, so they're expected to continue that growth. We'll see that in their earnings. Twitter, that's kind of a question mark, that's kind of a coin toss. If Facebook is any sort of indication on what we can expect from Twitter, Facebook had a phenomenal beat and just a huge spike in the after hours. You know, maybe we'll see the same sort of look on Twitter. And then finally, Neo, we know about the semiconductor shortage, the chip shortage that's happening, rocking the EVs. And, you know, we'll talk today about what's going on with that and also what we can see coming up for these companies in the future. All right, so let's go ahead and do this. Let's get ready to rock. Welcome back. For those of you who are interested, down in the description is a link to my Patreon. By heading on over there, you can see the portfolios that I have set up, my growth portfolio, my dividend portfolio. The growth has had a lot of recovery recently. Man, oh man, was there a big sell-off for a while. Some of those stocks are recovering nicely. It's really neat to watch it rebound the way that it has. The dividend has been strong all the way through. And as a matter of fact, during the growth stock sell-off, the dividend stocks actually went up in price. So that one's been rock solid, but it's made of more rock solid companies. Also over there, I put out a weekly newsletter along with a weekly watch list of stocks that I create, and it's also members of the Patreon. The patrons can also contribute to that watch list. They'd let me know through a spreadsheet what else they would like to see added, and I'll toss that on. This week right now, I think we're up about 3% or so overall on that watch list, and it's a neat thing to see. You can go then, you can pick out through those stocks the ones that you like best, and see how they perform for you for the week. Let me move on from there. Also down in the description, you'll find a link to WEBULL. By signing up and depositing $100, you get 2 free stocks. I get 2 free stocks for the referral. Thank you guys for any support that you show this channel, even if it's just watching these videos. I want to help any way that I can. If you like these videos, hit the subscribe button. You can hit the notification bell, hit the like button. You can share with your friends. Let's get on to the stocks. All right, so the camera on my laptop isn't working, so I guess you just don't get to see my pretty face during this point in time. So I apologize for that, guys, and I understand if you want to stop watching the video since my face is missing from this part of it. But here's Twitter. You can see the Q1 earnings preview, and this is from Seeking Alpha. And on here, you can see the earnings per share estimate, 14 cents. An increase of 27.3% year over year, and then also an increase of 27.5% year over year for the revenue estimate that they have. And what we've seen recently is that beating the estimates that we have in EPS and revenue is one thing, but then also the forward guidance is the place that's kind of causing a few stocks to tumble. I think Pinterest was one of those stocks that didn't really quite have the outlook that they were hoping for. So if Twitter, what we want a beat on the EPS, we want a beat on the revenue, and we want to see more of these daily active users. We want to see an increase there as well. And you can see that half the time that they beat the EPS estimate, and 3/4 of the time they beat the revenue estimates. But again, that forward guidance is definitely something that we want to look out for. The 4 upward revisions, good news for us. And 19 upward on the revenues, also good for us. The 10 downward for the earning per share, that the analysts aren't expecting that EPS to go up as high. We'll see how that plays out. Let's take a look at the chart. All right, here we're looking at the daily chart for Twitter, and you can see today that I had sort of a rough day, sort of falling off the edge here. And if we look intraday to see what has taken place, you can see in the after hours that it did recover significantly, taking us almost up to $68 a share. So let's go back out and see where that puts us on the daily. So $68 a share, that's recovering quite well, and that some of that move could have been in sympathy with the Facebook news that we had, with the beat that we had on Facebook. I mean, that was just huge for it. Maybe Twitter, they're expecting it to move along with it a little bit. You can see that it does have some room to run upward, and we also have some resistance that we would run into with these previous highs that we have here. And you can see since this drop off, we have this high and then this low, and then we got a higher high, a higher low. So we're continuing that upward movement with Twitter. If I put up the 200 period EMA, you can see a little bit more of that we're still up above it. We're still in that bullish zone. We're still moving upward. We have a positive slope here with the 200 EMA. If we look at the analyst estimates, you can see we are well above the low analyst estimate of $29. I don't see us hitting back there. I think that we'll either stay right around here. If we get somewhat mixed news or okay news, we could see that pull back a little bit. And like I said, we're about 68, so this is just showing us the close of 65.70, but we're really closer to that $70 mark. So if we get excellent news, we get a beat on earnings per share, we get a beat on revenue, and also if we have excellent forward guidance that we're moving really towards those 2023 goals of moving up to being $7.5 billion in revenue, seeing that we're on track for that and seeing that we're even beating expectations on that is really going to be convincing here. All right, next we have Amazon, also Thursday, April 29th after the market close. And when you take a look at this one, you can see, you can see the consensus estimate, 92% year over year for this, which some of these numbers could be skewed a little bit by the pandemic, but don't forget that Amazon also just had massive growth and coming out strong out of the pandemic, and it's also expected to continue to be strong, coming out a clear winner out of the pandemic as well. So these numbers, even though 92% is huge, it might not be as sustainable, but it's something that Amazon is just it's a bull of a company. It has a lot of momentum going to it, and we can see that when we go to the chart. We'll take a look at those, and you can see the momentum that it's had over the past year. And it's just been a great story for Amazon the whole way through. The revenue estimate that we have on Amazon expected to be up almost 39% year over year, and you can see the Q1 guided revenue that they have between $100 billion and $106 billion, and the operating income between $3 billion and $6.5 billion in the Q4 earnings report. So not only are we looking to beat the estimates that are out there and also beat the guidance that's out there, or at least achieve that guidance, but then it's the forward-looking guidance that really determines how strong the market reacts to the prices that we see. So let's go to the chart, and we'll see what they have to say. Real quick before I get to that, you can see 75% of the time that they beat EPS and revenue estimates, 15 upward revisions and only 10 downward. And when you look at revenue, you can see 25 upward revisions in the last 3 months and 0 downward. So top line, revenue-wise, we can see that there's really strong expectations riding on the back of Amazon. All right, so here's the daily chart for Amazon, and you can see recently we had the sell-off going down into March 8th, and then it's kind of traded sideways, slightly up for a little bit, and then it just recovered beautifully over that time, flagged down for a little bit, and then breaking out again upward. So this still bullish path that we're on, and some might argue that it's a little bit overvalued for right now, and maybe it could be a little bit too much too soon. We'll see that, but if we take a look at the analyst estimates, down to the low side, the 12-month price target for this, down to about $3,000 a share, and then just to the average from there takes us up to almost $4,000 per share. So that's another $500 up from where it's at right now. So that's about 16% from where it's at right now, all the way up to $5,200 at the high analyst estimate. And out of the 47 analyst estimates that we see here, we have 3857. We have like 95% of the analysts who rate Amazon with a buy rating. So just really cool to check out. There's a lot of strength that goes along with Amazon. They're a really super solid company, and I don't think that they're going to go anywhere anytime soon. And really what we're looking for, not only for a beat or to meet the expectations that we have, that's not going to do a whole lot in and of itself. Really, it's that forward outlook that we have for Amazon that's going to really determine how the price moves tomorrow in the after hours. All right, finally, we have one that I'm excited about because I absolutely love NEO as a company. And when we look here, they're scheduled also, same thing, aftermarket close Thursday, April 29th. And you can see that they're still expected to lose, but still a gain at 31% year over year. They've had a huge run since the spring of 2020. all the way into the spring of 2021. It's just been phenomenal, and you can check it out in the revenue estimate that they have going on here, 106 billion year over year, over quintupling year over year with the revenue estimate that they have. And you can see that NEO doesn't always do such a great job at beating its EPS estimates, and also the revenue it does have a good track record of beating. And when we take a look, there hasn't really been much as in the way of revisions, just one downward revision on the earnings per share. The semiconductors certainly a limiting factor, and when you read a used report from Deutsche Bank, actually I have that over here, talks about Q1 being 20,000 vehicles and then up from Q4's. So we have an increase in production, and I think the quarter over quarter numbers that we have for the production that we have, or for the deliveries for the NEO vehicles, I think that's going to be more important than the year over year numbers that we see. That they'll be a little bit more meaningful, a little bit more telling. So we do see an increase there of about 2,700 vehicles from Q4 of 2020 to Q1 of 2021. So when we see quarter over quarter, that's really strong for us. And let me scroll down here, and then we see 22,000 deliveries. So another 10% about on top of what we did in Q1 is expected for Q2 in the deliveries. And then when you look here, 95,000. So if we add together the 20,000 from Q1, the 22,000 expected from Q2, that would come out to about 42,000. That means that we have another 53,000 vehicles for deliveries for the rest of Q1, which means that you from Deutsche Bank anticipates that we're going to get more growth quarter over quarter in the vehicle deliveries, which means more revenue moving forward from there as well. The gross margin that's expected from Edison U is 15.5%. So we also, for the year, get more growth as well, at least expected anyway, from Edison U, from Deutsche Bank, 18%. So we're expecting another 2.5% on top of another 2.5% on average. So when we look at the gross margin of 15.5% for Q1 that's expected by you from Deutsche Bank, and then we take a look down here at the 18% gross margin, that means on average for the full year of 2021, we expect even more gross margin what we had before. So 18% means that there has to be even higher than that in the coming quarters in order to balance out that 15.5% that was lower. So we'll watch that play out. These growth numbers are always good numbers to see. It means that NEO's moving in the right direction. He does go on to say he thinks that 2021 is going to be anticlimactic. There's not going to be a whole lot going. And when you look here, he mentions product cadence, so the pace at which those products are released, and also the semiconductor shortage. But then when you look down, 2022 is when he expects things to pick up. So this year there's going to be growth. It's going to continue. It's going to be a little bit slower, so he reduced his price target from $70 down to $60, given the information that he has in here. And then he also says in 2022, that's when things are going to get exciting for NEO. So the price target has been moved down from $70 down to $60. You can see that mentioned here. And then they also say for this one, nevertheless, it's still a 43% upside from its current levels. So let's take a look at the chart. Alright, so here's the daily chart for NEO, and you can see it was all the way back here, almost $67 per share, and then we hit the sell-off in the beginning of February, and then all the way down to, again, March 8th being about that bottom, and you can see that NEO bounced off it a couple times, bounced off those lows right around, looks like around $33 per share or so. The nice thing that we see is that even though the bottoms are staying even across these last two low points that they have right here, you can see this high that we have isn't quite as high as this high. We are making a little bit of upward movement. We are staying up above that 200 EMA. If we come back down again and we should happen to touch off of that, I think that it could still act like as a line of resistance for us moving forward. What we want to see is that the lows stay higher and the highs keep going higher. If it doesn't do that, the next best thing that we could see is for it to just trade sideways for a little bit. Really what we want is excellent guidance coming out, and we'll see if Edison's right, if it's going to be sort of neutral or cool guidance moving forward throughout the rest of 2021, or if NEO has something to say that's rather exciting, that's going to motivate investors, and then you can really expect to see a large spike in the after hours tomorrow. So let me summarize. For all three companies, it would be absolutely excellent to see a beat on all the earnings, a beat on the revenue, and in the case of Twitter, to see the monthly active users increase dramatically, all of their top lines and bottom lines just to explode. That would be a wonderful thing. I don't know what we'll see, how we're going to compare to those estimates. All three companies have very strong growth numbers. It's a matter of living up to that growth number and seeing what's already been priced into the stock. And if we get numbers that surprise us, then, well, we can have surprises up or down. Hopefully it's to the upside that we get excellent forward guidance from Twitter, Amazon, NEO. We'll have to watch those as they play out in the after hours on Thursday, April the 29th. So keep those on your calendar. Watch them as they come out. Decide what you're going to do about it. If you're already invested in any of those three companies, great. If you're not invested in those three companies, if it's one that we see the growth, we just don't see a strong growth as we were expecting, then that could create a little bit of overselling, which could create a buying opportunity if you're interested in any one of those three stocks. So thank you guys for stopping over. Down in the description, you can find the link for the Patreon, the link for WEBULL if you want to sign up and deposit your $100 and get your 2 free stocks. All that's down there. Thank you so much for watching these videos. I really appreciate it, and thank you to those of you who post in the comments to reach out to me. I got some of those comments I got to get back to tonight, and so I'm going to get back to those people. I really appreciate all the support that you show. It's been wonderful so far, and I look forward to producing more content for you guys coming up in the future. If you'd like to subscribe, go ahead and do so. Hit the notification bell, hit the like button, share with your friends. Remember, these videos are for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.